For more on the broader markets, we are joined on the set by Peter Kraus, Aperture Investor Chairman and CEO. Good morning to you.
Andrew, how are you?
You're looking marvelous in purple this morning.
Told you.
But help us, purple is a, in between.
That's why
color.
I did it.
Exactly.
Yeah.
But when we talk politics, we're going to talk markets. So what have you been thinking since this Monday sell-off and everything else that's happened all week?
Well, I think you got to look at the facts that we actually have, which is, one, for the last, 3 or 4 weeks before the sell-off, the Mag 7 stocks were actually reasonably unstable. They became much more volatile. They showed significant moves, daily moves. And then we had this economic number. Unemployment went from 4.1 or 4.2 to 4.3. And everybody thought the world was coming to an end.
Right.
Of course, 3 days later, we got ISM numbers, and the ISM numbers, which were supposed to be contractions, actually showed expansion. And of course, all of a sudden, the world just decided that we're in a recession, it's a hard landing, and you have to sell everything. Really, what I think is going on is that the market is kind of non-directional right now, meaning there's not a lot of natural buying in the market or natural selling. And investors are trying to wait to see what actually is happening in the economy. Or if you look at earnings, you have some earnings that are strong and some earnings that are weak. It's not a consistent story. There are some industries that are weaker, auto, being one, but there's some industries that are actually doing pretty well. So I think what's happening is that momentum is taking over and people are selling the positions they have. They feel mispositioned in a market that's obviously volatile. And so you're getting these big daily moves. I think we're likely to see that probably continue until September.
And what happens in September?
Well, the Fed's going to say something or do something.
Okay, but let's assume that they cut by 25 basis points. Mm-hmm. How does the market react to that? And let's assume that they cut by 50 basis points. How does the market react to that?
So I think we have to add a few more assumptions. Let's assume, first of all, to take the 50 basis points. Let's assume they cut by 50 basis points. And you continue to see weaker economic data.
Okay.
I think the market will conclude, actually, this is not a soft landing. It's a hard landing.
And there's even a bigger problem at hand.
There's a bigger underlying issue that people haven't recognized. And I think the market will sell off. But by the way, that will create a buying opportunity because, then you're sort of at the end. Mm-hmm. If they cut by 25 basis points and we see this sort of good data, bad data, but, kind of in a modest direction, then we're either going to continue with this volatility or the market will conclude they're going to make it. It's a soft landing. Somebody said this. I think it was Yardini said this about this looks like 1987. Now, I lived through 1987. I would say not 87 because you had an incredible drop. It was 500 points in a day.
28% or something.
I'm sorry, yeah, it was an enormous percentage.
Unbelievable. But
I do think what was true about 87 and what was sort of true about 18 is that the market thought a certain thing and it didn't turn out to be true. And then the market recovered.
Right.
And I think that's where we are today.
So, okay, let's say you're watching this broadcast right now. You're sitting on some kind of cash, waiting for some moment to catch the falling knife, either at the bottom or at least on the way, right? Do you do that now? Or based on your proposition, you actually wait till September?
No.
The problem is if you wait till September...
No.
You've got...
You know my view. Long-term investing is critical. If you get a 10% discount, take it.
You got that in most of the Mag 7 already.
We got it now. The question is that a dip or is that going to become a 20% discount?
Let's say it goes down 20%. Yes, you'd be smarter buying down 20, but you bought it down 10. That's still a good deal.
You can't time it perfectly, I guess.
You can't time it perfectly.
And you could buy more.
And you could buy more. And you should buy more. You shouldn't spend all your money now. So spend.
So what have you been doing this past week?
I actually did. I bought equities.
You did?
I did.
Bought that new tie.
Was there anything you sold?
I bought that new tie.
Is there anything you sold?
Beauty.
I did not sell anything.
You sold nothing?
I sold nothing.
Is there anything you had sold earlier in the summer, like Warren Buffett?
Yeah, well, let's talk about the portfolios. In the portfolios, we definitely changed risk. We took risk down because volatility was going up. And so, we like any reasonable portfolio manager, you would adjust your risk positions to a much more volatile market. And I think that volatility is going to stay until we see some clarity.